Dan Passarelli of MarketTaker.com here on the floor of the CME Group. Well, one of the trades we talked about today in our Market Taker Live Advantage group coaching class, where you get about 15 trade ideas every day, was in Yum Brands, symbol YUM. Now, YUM just had a pretty significant drop in its share price, and it just had earnings. Because the stock just had earnings, the implied volatility is pretty low, meaning option prices are pretty cheap. The stock just experienced that big drop, so it's been kind of volatile. In fact, it's dropped down to its 200-day moving average, which is always, in all stocks, an incredibly significant pivot level. We've seen in the past Yum bounce off that 200-day moving average and had some pretty good follow-through on the bounce. We've seen it break down below that 200-day moving average and have some pretty good momentum heading south after that. So, right now, what's the trade? A straddle. The September 75 straddle, buying it at 425 or better. Now, here's the deal with this trade. It encompasses the two things that I look for in a straddle. The options are cheap because the implied volatility is low, but the stock has great potential to have a lot of movement, to experience high realized volatility going forward. So I look at the 60-day trade because the implied volatility is low, of course, and the theta is low. So even though it's a 60-day option, I might not hold it for 60 days. I'll probably look at holding this for a couple weeks if I'm to put this trade on. Okay, so again, just buying the longer term one because it has lower theta, so I don't get punished as much as time passes. And if I get that bounce up off the 200-day moving average, great, I can take my profit, hopefully within a week or two, 3 at the most. If the stock goes through the 200-day moving average and follows through, great, I can take my profit then as well. Now, what happens, of course, if the stock doesn't move? It just sticks around right here where it is. Well, I don't think that's going to happen, but it could, of course. If that's the case, I'm going to hold this for about 1 week at the most. That's because I lose a little bit as time passes as a result of time decay, and I'm only going to allow myself to lose so much, 7 days worth of theta. So either way, trades off in a week if it's a loser. The trade's off in 2 or 3 weeks if it's a winner. I've got some pretty good leveraged potential profit opportunity on this trade because straddles have unlimited profit potential in theory. So this could work out pretty well if we get the momentum that I'm looking for. This is Dan Passarelli of MarketTaker.com here on the floor of the CME Group.